What's going on, everyone? In this video, we're going to go over some trade setups from today, some trades I took, and some trades we took over in my Discord community. We spotted a very heavy seller today in the S&P 500. We were watching it from the tape. It could have been an algo leveraging into a large sell position, someone with a fat pocket, and we confirmed this by the sell-off today. So we're going to go over that along with market context, with how to use today's lessons as building blocks for future trades. It's going to be a very insightful video. All I ask is if you could just drop a like on it. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. Like I said, link will be in the description below. And now let's get right into the breakdown. To get more context of this setup, let's go over the pre-market plan on the Nasdaq future. Now, whether you trade the future itself or you could trade QQQ options based off of this chart. I like charting the future because it's very liquid and it works very well with supply and demand imbalances. So I post these every single day in my Discord room. We had nice overnight action. The major zone of interest is the 13823 demand zone. We were bouncing at it yesterday. We wanted it to hold. If it did not hold, we also had demand a little lower at 13779 and 729. I have a 2 demand zone rule where if we do not get supported by buyers, we have to be a little extra cautious as sellers will take control and they are showing more aggression. To the upside, we had the 13893 supply zone and one a little higher at 13964. So now that we have those zones in play, here is our first one. Overnight, we were bouncing at this demand zone. So if you do trade futures, this provided a nice about 100-point rally, and then we came into the supply zone at the open. So this is where my first trade came into play on the Nasdaq. Let me zoom in. So I liked how we were selling off at the open. I'm very cautious in the first 5 to 10 minutes due to whipsaw action and due to how volatile options are, and you could get crushed if you are on the wrong side of the trade. So I waited a little bit and then we came back up, and I'll show you what it looked like at the time. We broke the high, and a failure to stay above the high, especially that we're inside of a supply zone, to me is very bearish. So I took QQQ puts short, anticipating a lower day break and a potential move into our demand zone, which we had a little lower, like I said, at 13823. Then we finally got that push. And I saw this little red or green candle right here, and then the immediate candle started rallying to the upside. This is while names like Tesla was rallying, Apple was also rallying. So I didn't want to get caught on the wrong side of the trade, so I took my profits fast. I did make money on it, but I could have, if I sold near the bottom, made a very good trade, because when I scalp, I'm going in with larger size, anticipating a quick move like we got. And especially if you trade QQQ or Nasdaq itself, these contracts move very fast and they're very liquid. So then we finally got that push up into supply, and then this thing started consolidating. It started moving kind of sideways inside of supply, and the idea here is you want to play puts, like I said, inside of supply, because this is an area where we have an existing seller or a supply imbalance based on previous price action, and once the market retests the zone again, we want sellers to be aggressive and be responsive to take us down again like it did the first time. So here we had this push down, and around 10:06 I was watching Nasdaq. I took this short again around 10:01 once we broke this little trend line right here. We had supply, we were making also lower highs, and I've been scalping in this market due to the volatility. So a quick little break like this inside of a supply zone will give me enough validation, and then the next 10 or so minutes we were moving completely sideways. So this is where it comes into key, because I was also watching the S&P 500. So same thing as Nasdaq, on the S&P I chart the future and will trade SPY options or the contracts of the future itself. However, we had supply that we were selling off overnight, which formed new supply around 4160, 4167, that if we were to rally into, we were watching sellers to be responsive. We also had demand, keep this in mind, at 4134 and 4125. Let's see what happens, and I'll update in intraday commentary, which is essentially where I post my thought process as the market's developing, the setups that I'm seeing form in real time along with market context. So here we have the S&P 500 chart. Let me maximize this a little bit. Now, this was not demand prior to this, but because we got that 10 point or 15 point rally at the open, this confirmed demand. We did have a supply imbalance that we sold off overnight and then formed new supply at 4160. So if you do trade futures throughout the night, this was a beautiful short setup. Let me just fix this chart. So now that we have this, let's go into actually a 1 minute chart. So that supply was a nice short. Now the market opened and this was chopping around. Again, if you've been watching my videos in the past 2 weeks, I've been telling members this also. Low volatility will hurt for option traders, especially because volatility is something you want to see move the premiums a lot. So throughout the commentary tab, I was in Nasdaq short. Like I said, it really was not moving in my favor at all. It was moving sideways. The premiums really were not getting destroyed. They were getting destroyed a little bit. And then we finally got a push down. But going back into the S&P 500, I did not take this trade short, but going to the overall market context, at 10:06, we had very heavy size hitting the S&P 500 bid here. Now we could see the lots over here and we could see the price all pretty much came in at the same time, which was a little fishy to me to see such large size. To put this into a little bit of a perspective, this was easily over $150 million, removing liquidity from the S&P, all at 10:05 and 41 cents. And if we were to look at the volume at 10:05, it really would confirm it, even at 10:04. So we had very heavy, aggressive sellers hitting the buyers on the bid. Then the market, now that we know this at 4145, we have to keep that in mind now that we have sellers in the market at that price. So let me pull up the S&P. Here it is at 10:05. So now we can mark this out as an area where we have a large seller being present. We don't know if it's one, but because, like I said, they were at the same time, I don't know if it's how TOS ordered blocked the orders. However, this is a very important area of interest. Above it, these sellers are going to be in pain and could fuel a move higher, especially that, we had supply about 14 points to the upside, but below it could have fueled a further move to the downside. It's all about intention. Now, if you see a heavy seller or a heavy buyer, it doesn't mean to hop on the same side as them. But at the same time, I was seeing some type of manipulation on the level 2 as there were heavy size forming on the bid. And as soon as these prices were to get hit on the bid, those buyers would disappear. So I said 4145 is key. The only reason I think this is a misroute is they came in at the exact second. Pressure below 4145 will build a move into demand, which was created around 4140. Like I said, this zone right here. So if we were below it, we were targeting, we could play puts, speculating that the 4140 demand will trigger, and if we get a further sell-off and we saw more aggressive sellers hitting the bid, we could have traded lower at 4134. So now that's in mind. Think of this as our line of least resistance. It's our area where we want price to stay below. Now at the same time, because I was in the S&P, I like monitoring the markets itself. I thought this was going to fuel a further move down, especially that majority of tech equities looked a little weak. So Apple, from the pre-market plan, we wanted to move above 136, 135-ish for another leg up into 139. So we did open up inside of supply, and just like the Nasdaq in the morning, we failed to stay above the high. It's a very bearish sign. Apple also had its release today, failed to stay above the high. This started selling off pretty aggressively. It finally broke the low. At the same time, I was in Nasdaq. So like I said, I wanted to see a further move to the downside, but briefly after this, we got our chop, and that's going to bring me into my next point on the S&P. Pull this up here. I said something fishy is going on. We had the NQ supply, and then at 10:46, same exact thing. Like I said, weak tape. Those aggressive sellers came into the market again. So something's going on. We know we have heavy sellers, and now they're at 4132.5, about 13 or so points lower from the original order at 4145-ish. So now we have 2 points that sellers are present. Then the market came up. So this is only something that's going to be seen as the market's developing. It's not something you're really going to see. However, every time we would push up the market would fail. Push up, the market would fail. Push up, the market would fail. So this is telling me that once we get this push down right here, people that were short the market, now you're going to have a lot of traders chasing this move to the downside, especially that we're at low a day. It's a prime point for retail to start shorting the market because it's at the lowest point of the day. So now we know a lot of traders are short. We had volume to confirm it. We had that heavy seller over here. Now price moved up, and there's two things that could happen here. You have the traders that were short are now stopping out up here. They have to cover their position. When they cover, they have to buy. And if they're aggressively buying, they are buying from a passive seller sitting on the offer. Also, point number two is you get this quick little green push up here. You have a trend line break as well. You're going to have a lot of traders scalping this to the long side, thinking it's about to break out. So you have two different types of positions being opened right here to the buy side. And we know it's getting absorbed by sellers due to these wicks. Every time we move up, it gets shut down. It's like a shutoff valve. We move up, water flows through it. We shut the valve off. It comes back down. So we saw that, and then we finally got that perfect push into demand. This would have been an invalid area to get short, put your stop above VWAP. But like I said, I was monitoring the Nasdaq trade. While that all was happening, and this was something that I wish I did a little differently, I was in Nasdaq and I saw this quick little move down. My contracts were up about 30 or 35, 40 cents. So I was pretty happy with this trade because if you're going in with 50 to 100 contracts, you can make a very good trade off of that. So I saw that. I thought we were going to get a little more movement to the downside, especially with how equities were pretty weak. And then we started moving up. And as soon as we got that quick push up, I got out of my full position. Did not want to play any games with the market. And hindsight, it looked good as a sell over here. But unfortunately, we had a beautiful sell-off. These wicks correlate to the S&P wicks. At the same exact time, the market seemed like it was being held up and rejected. And then just like we saw yesterday, the rug was basically pulled. Imagine walking on a floor. You're walking on it and all of a sudden the floor disappears and you fall down to the floor. That's what basically happened with the market today. There really weren't any evident buyers present at all. So even though we had demand, there wasn't proper confirmation. This is something that a lot of traders struggle with. These supply and demand zones, I tell members in the course all the time and in the chat room throughout the day, I'm telling them, listen, we need to have proper confirmation. You need to have at least one or two good reasons to get long. That's telling me buyers are present here. Even though we're at demand, this is not a valid reason to get long. There were zero bids into the market. We kept selling off. And if we were to look at the S&P 500, we had this demand zone, really nothing there. A good telltale sign is once rallies all get shut down. So we had this rally right here. It got shut down. Another move down. This rally got shut down. Another rally got shut down. So very weak tape. The sellers were very present. More sellers down here inside of demand. And at one point, I was watching to catch a bottom right here. Once we made this little ascending wedge, if we get above 4130, we're going to target VWAP. Fortunately, we never got above it, and the market again started selling off pretty aggressively. Now that we're below this demand zone, this is invalid, and I have to clean this chart up a little bit. However, there really wasn't any signs of buying, and then throughout the whole afternoon, after around 12 o'clock, we moved sideways. And if you were not short on this pulled back down here, you're going to have major FOMO here. And this is what separates the best traders to the worst ones. You have to be patient and you have to be able to sit on your hands if you miss the proper move. Same exact thing. I'm not really going to break it down on Nasdaq. We sold off on times like this where the couples of demand zones don't work and we have aggressive sellers. I wait for extra confirmation to get long. We did eventually bounce at the 13729 demand zone from the pre-market plan. It took from the first two ones to get wiped out. But again, there were aggressive sellers. And just like the S&P, it was moving sideways. And then Facebook, it showed relative strength, meaning when the market was selling off and pretty aggressive to the downside, Facebook found a bid and started rallying. We had very heavy volume, especially that we were pushing into the 304 area, which lined up with a supply imbalance. And then the market rejected here. But this kind of happened when no one was watching. It was like around 1 o'clock-ish, 2 o'clock-ish. Very nice volume into a supply zone, relative strength compared to the market. And then we had Boeing. This basically is like how the market was itself. We were watching this demand zone. We were opening up inside. We wanted it to find a bid and start rallying from here, especially after gapping down. However, look at this price action. I mean, this is straight down. And just by looking at a 1-minute chart, you could tell that there's no bids in this market. There's no buyers, and there's no real reason to, try to catch a possible reversal here, especially that the market is consistently chopping to the downside, not really giving us any entries. We had more demand zones lower, but this one again, just like how the market was, the Dow was also pretty weak and we started selling off. So this is a perfect example of when to not really be long something, even though we have demand. There's really not proper confirmation. You want price and volume to confirm a supply or demand imbalance, and the supply and demand imbalances are just there to advertise for price itself. So keep that in mind. I think I'm going to end the video here. I hope this helped. This is the type of analysis that needs to be done. If you want to join the Discord and you want to learn more based on the strategy, be sure to click the link in the description below. Make sure to follow me on Instagram and like this video if you did learn something off of it. But besides that, I'm going to end it. Peace.